Hey everybody, this is Brian Gormley with another edition of Where in Greater DC. As everyone knows, we film in a different location each and every single week, and the first person to correctly guess and submit our filming location to support at Cornerstone Properties, homeinfo.com gets a free prize. So in addition to having a little bit of fun, we try to give away a free little tip and trick, whatever, about real estate, short sales, etc. And this week we're talking about the latest numbers that are hitting the presses. For starters, the Fed has decided as of yesterday that they are going to postpone the relaxing of the quantitative easing that they announced earlier this summer. I think really for sort of two reasons for that. Number one, the housing market is still, can perceived to be fairly unstable, and by the way, we're just going to kind of walk up and down. Sorry for the traffic noise today, but hopefully people will recognize this filming area. And number two, so they don't, and the market has such a negative reaction to the announcement. Just a sentence by Bernanke in the summer, we might be, restricting our bond buying program in, the end of this year. You saw a huge dip up in interest rates, increase in interest rates, dip down in the stock market as people just overreacted to it. So I think there's a concern that the market still may not be ready for that, and unemployment figures are still high. That's really the big thing I think driving it. Unemployment figures are still high. That's driving some of this. There's just a perception that the market is kind of getting propped up artificially, and so we need to continue the subsidy before letting market forces take back effect. And the other interesting thing of note that just came out is that and as of June 30th, end of second quarter this year, we had a 10% increase in real estate prices, and a corresponding substantial decrease in the number of homes that are underwater. It's down to about 14% of all homes, which is really a sizable decrease from what it's been. It's been 25, 30, 35% of homes have been underwater heretofore. And so down to 14%, about 7 million people, is huge. Now most of that inventory is going to be from folks who really have kind of on the lower end of the spectrum of house values, and that's going to be hard to really remedy. Those property values do not increase substantially, not in the short term at least, and so getting rid of that inventory is going to be tough. But that's generally good news for the marketplace as a whole, to the extent that we've got a lot of the toxic assets out of the marketplace. A lot of the unemployment is hopefully sort of done, and the job layoffs and so on. We're kind of on the rebound, and for a huge majority of the market, they can now sell the property for something above or equal to what it is encumbered by in terms of mortgages. So definitely a positive trend. We'll see if it continues. I would look for interest rates to stabilize and maybe go down a little bit here, and with the good news, and that will just increase buying activity, and again, which is great. We need that. It seems like we've been kind of in a funk here the last couple of months, and that will increase home prices. So all good things. If you're in the real estate market as a real estate professional or as the owner of a property that you want to sell, look for the spring of 2014 to be potentially strong. Well, obviously, subject to all the other factors that might have an impact on the real estate market. So that's it for me. Don't forget, send your guests to support at Cornerstone Properties, homeinfo.com, and we do, by the way, negotiate short sales. So get in touch with us if you need some assistance selling your house or negotiating the deal. Maryland, DC, and Northern Virginia. Thanks so much, and look to see you next week.